QatarEnergy, which shut down its LNG liquefaction plant on 2nd March, require at least 2 weeks to restart operations and another 2 weeks to return to full output of 77 million annual capacity. Caught in the middle of Iran-US war and drone attack on its liquefaction plant, Qatar announced on 4th of March that it had declared force majeure 2 days after halting LNG production. From the day production resumes at QatarEnergy, it will take a month for major buyers of Qatar LNG to receive their first cargo. 4 Asian economies, China, India, Japan and South Korea, account for 75% of oil and 59% of LNG flows through the Strait of Hormuz. Constantly exposed to Iranian drone and missile attacks, Qatar is unlikely to resume LNG production very soon. The Strait of Hormuz has been blocked, has been shut by Iran, and over 13 loaded LNG tankers are stranded near Qatar with 3 more empty tankers waiting for the LNG production and loading to resume. 2 empty LNG tankers of India's Petronet LNG, Asim and Rahi, are stranded on the east of Strait of Hormuz, while Petronet LNG's 3rd tanker, Disha, loaded with LNG, is waiting for marine traffic to resume in Strait of Hormuz. The LNG end users also subjected to an extraordinary rise in shipping cost from this weekend. Iran crisis has pushed the daily spot rate for 174,000 cubic meters tanker, LNG tanker on the US Gulf Europe route jumped from $260,000 to $300,000 per day, which is an extraordinary rise in shipping cost. Meanwhile, rates on the US Gulf and JKTC, which is Japan, Korea, Taiwan, China route, have also jumped or surged from $42,000 on 25th of February to unbelievable level of $300,000 per day, which is massive, huge rise in Gulf and JKTC route in shipping cost. A similar increase has been observed on the Australia JKTC, which is Japan, Korea, Taiwan, China route, where rates have reached to $255,000 per day. Data from Spark Commodities showed that the Spark 30S Atlantic LNG carrier daily spot rate for 170,000 cubic meters 2-stroke vessel reaching to 278,250, which is its highest level since December 2022. Fernleys in its weekly report noted that the charterers are willing to pay rates up to 10 times last week's level to secure prompt tonnage, while there is also interest in a multi-month period of up to 1 year in the 6-figure range, which is above $300,000 per day. 1-year charter rates are now estimated at $100,000 per day, which is up from around $58,000 week-on-week basis. The rate increased by $116,500, surpassing the record daily rise registered on 3rd of March. According to Poten Partners report, charter rates for LNG carriers could climb even higher than 6-figure numbers if high gas prices hold. Poten points out that the increased LNG prices will allow charterer to pay higher shipping rates. Natural gas futures prices in Europe, which faces serious supply crunch and fast depleting gas storage levels, rose above €52 per megawatt hour on Friday. This would be its largest weekly gain since February 2022, amid concerns that the prolonged conflict in the Middle East could severely disrupt gas supplies. Analysts expect the European gas storage could end March at only 22 to 27% of its capacity, which is significantly below the 5-year average of around 41% of its total storage capacity. If less LNG arrives in the next 4 weeks to Europe, storage levels could decline further, increasing the risk of supply shortages. European gas prices have surged more than 50% this week, reaching their highest levels since early 2023. Thank you for watching.